Hey everyone, and welcome! So today we're going to dive into a tool that's all about bringing some calm and clarity to your trading charts. It's called the Heikin Ashi technique. And look, if you've ever stared at a chart and just felt completely lost in the noise, then you're really going to want to stick around for this.
All right, so first things first, let's talk about a problem I'm pretty sure every trader has faced, especially when you're starting out. You're looking at your screen, you're trying to figure out which way the market is heading, but all you can see is this jumble of conflicting signals. Sound familiar? You see a couple of green candles pop up, you think, okay, we're going up, and then boom, a few red ones. Then more green, right? It's just this constant seesaw that makes it almost impossible to figure out if you're actually in a trend or if it's all just random market chatter.
Okay, so take a look at this. This is your standard Japanese candlestick chart. And while it's a fantastic tool, you can totally see how all that up and down, that whipsawing action can just mess with your head. It can fake you out, making you think a trend is over when it's just taking a breather. And all that noise makes it incredibly hard to stay in a good trade.
But what if there was a way to just filter all that out, to see what the market's really doing underneath all that choppiness? Well, guess what? There is. Let's meet our solution, Heikin Ashi.
Okay, so what in the world is Heikin Ashi? Well, the name literally means average bar in Japanese. And honestly, that's the perfect description. It's basically a special type of candlestick chart, but instead of just showing you the raw price, it uses a formula to average everything out. And the result? A much smoother, cleaner-looking chart that's designed to make the real trend pop.
And here it is, side by side. This is where you really see the magic. On the left, you've got that noisy, standard chart. And on the right, that's the exact same price action just shown with Heikin Ashi. Look how much smoother that is. The trends are so much clearer with these long, clean stretches of green or red. It just makes it way easier to see the big picture.
All right, so it definitely looks cleaner, that's for sure. But how do we actually read it? How do we turn this pretty picture into something we can use to make decisions? Let's break down what these candles are telling us. You know, the real beauty of Heikin Ashi is just how simple it is to interpret. By just looking at a candle's color, the size of its body, and, this is super important, its shadows or wicks, we can get these really clear signals about what the market's up to. Think of this as your quick start guide. A nice long green body? That suggests an uptrend. A long red body? You got it, a downtrend. Now, if you see a candle with a tiny little body and wicks on both sides, that's your heads up. It means the trend might be hitting the brakes or even turning around. But here's where it gets really interesting. The most powerful signals are these last two.
Check this out. When you see a whole string of green candles and they have no lower shadows, no wicks at the bottom, that's a huge sign. The chart is basically screaming at you that there's a really strong uptrend in play and that the buyers are in complete control.
And you guessed it, the exact opposite is true for a downtrend. A series of solid red candles with no upper shadows at all? That's a signal of intense selling pressure. So get this, sometimes the absence of something, like a shadow, is actually a way more powerful signal than its presence. Okay, but let's be real here. No tool is perfect, right? And Heikin Ashi is no exception. It has some awesome strengths, but it also has some big weaknesses that you absolutely need to know about. So let's get into the pros and cons. On the plus side, like we've seen, you get these beautifully smooth charts that make it way easier to spot a trend and, more importantly, stay in it. That smoothing effect filters out a ton of those false signals that shake you out of good trades. But here's the trade-off, and it's a big one. Because it's averaging the price, it can lag a little. It might be slow to tell you a trend is over, it's not great for super fast trading like scalping, and it might keep you in a trade so long that you give back a little profit before it finally says, get out.
Yeah, so that lag we just talked about, that's really the biggest drawback. It's kind of like the indicator is so busy smoothing everything out that it can be late to the party. By the time it gives you that crystal clear signal that the trend is reversing, the price might have already made a pretty big move without you.
All right, so we've weighed the good and the bad. What's the bottom line here? When should you actually pull this tool out of your toolbox? Here's the big takeaway, the most important thing to remember. Heikin Ashi is a trend-following tool. It absolutely shines when the market is moving strongly in one direction. That's its home turf. If the market is just chopping around sideways with no clear direction, Heikin Ashi can actually be a bit confusing. But when there's a real trend, it's one of the best tools out there to help you ride it.
And that really brings us perfectly to this fantastic quote from the legendary trader Larry Heikin.
Cut your losses and let your winnings run. I mean, that is the heart and soul of trend following, right? And that is exactly what Heikin Ashi is designed to help you do. By smoothing out all that scary noise, it helps give you the confidence to stick with your winning trades, to just continue when something is going well, instead of panicking at the first little dip. So the real question is, could Heikin Ashi be the tool that helps you finally master that skill? That's something for you to go and explore. Thanks so much for tuning in.